Investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the 29th of December edition of the Tiger Technicians Hour. Looking at the Dow down 188. Isn't that interesting? 188 at 48,523. But you want to see another minus 188? Look at this. 199, 198. This is the gold continuous contract. Let me just show you this while I'm thinking about it. So I did some work over the weekend, and we haven't added to our core positions in the gold and silver. We've taken quite a bit off. We just got a little bit left. Didn't take anything on for this previous rally. But when I was looking at it, and look at this, here is using on-balance volume. So I have a question people always ask me. We use volume, and especially all those fans of like Tom O'Brien, who introduced many people to volume. And I do look at volume for sure, but I use on-balance volume because it seems to give me so much more information that I need based on the Chapman methodology. So look at this. This blue line here is the closing price of on-balance volume. Look at this right here. This is the high of the 16th of October. Well, it didn't get the high. It was a day early. And then look what happened right here on the 23rd of December. Didn't get the high, but on the 26th of December, look what happened. It got the exact high. Well, we don't know if it's the exact high, but certainly for this major pullback, that was a pretty major pullback right there on the 21st of October. I would say that's pretty much a big red candle, right? I think this is a little different in the sense that we've taken out. So the high at this on the continuous contract was 4434.6, and the high, the low right now so far today is excuse me. 43.44. So 43.44. Right. So when that high right there gets pierced, excuse me, I don't know what's going on. Let me just have a little sip of tea. When that high gets pierced, that says you've taken out the last major move to the upside, and now you've got to monitor closely, because if within 2 days it doesn't close above that level, you're now looking at something that says, oops, there could be much more to come. However, look, that green 9-period moving average is still very strong, and that just says you have to see the price of gold go quite a bit lower, maybe down to 42.90 or even lower for that green 9-period moving average to go negative. Look what happened here. You took out that low, but it took you all the way. So it took you another 1, 2, 3, 4, 5, 6, 7 sessions to get that pink 9-period, that green 9-period moving average to turn pink. In other words, the 9 EMA went under the 14-period exponential moving average. So I'm watching this very closely because 3 things are happening. One is I have to go back. I haven't finished all my information on the other indices. But look, here's the dollar. The dollar is down 11 ticks at 97.94. I've been negative on the dollar for so long because we were positive from 2018 all the way until earlier this year, where I said, you know, if the second Trump administration is going to continue their wish from the first administration, which was to see the dollar much lower because of imports, exports, hey, I don't want to be long this anymore, and we've been out of it. And look at this. There's the rectangle formation. It looks to me like the dollar, if it takes out, it's at 97.94. If it takes out this low that was made just a few days ago, a few sessions ago, 97.75. No, I'm going to say if it closes under 97, look for a retest of the whole 96 area. However, this could be a delayed reaction. If in the next 3 sessions going into Friday, 3 market sessions or 4, you start to see the dollar above 98.31, that says, okay, money is now going into the dollar, and they could exacerbate the down move into those metals. So where's silver? Silver right now is trading down over 7%, down 5.6 at 71.63. Leg D. In the Chapman methodology, we had an instant restart over there. So you go E/A, F/B, G/C, and then you get D. And now that D is relevant because there's also a leg F in the weekly chart and a leg E in the monthly chart. This could turn out to be a lot more longer lasting. I don't know about the depth, but longer lasting, and we'll watch it very closely. All right, let's get back to our story. I'll just do it real quickly again. IND is now down 196, 195 at 48,511. I believe there's a real good chance, I'm going to put it in, that this is going to become, how many times over the last 2 years, it's been, I mean, I've done the Dow, a market call on the Dow every day for the last, 40 years or maybe more. So all I can say is it's so rare for the Dow to fail at an all-time high at a peak C, and yet it's done that a couple of times. Fail in the sense that it had a really sharp pullback, and one of them went below the starting point. So that was an absolute failure at a peak C minus. Rarely ever does it happen on the daily basis. So this is there's a chance that we've got 48,886, the high of the 12th of December. The high of Friday was, where was it? Right there. Friday was on the 26th. We hit 48,782. Round number. Isn't that interesting? You never see round numbers in the Dow. All right. And now we're pulling back. And where are we in the weekly chart? Look at this. I'll open it up so you can see it a little better. Right. 5 sessions out of the last 4 weeks, we've hit the pink 9-period exponential moving average. The 9-period lower inside track repellent line. Green is the upper one. And we've hit that and we've pulled back. So I'm watching this very, very closely. All right, let's go on. Because the S&P, I'll just run these real quickly. S&P is now down 31 and a leg D, which has gone to a peak D. Here's the other thing. Let me show you something about this chart right here. Look at this. Where's the on-balance volume for the S&P? Right there was the high. And a day after the high itself on the on-balance volume. Let's go to the QQQ. Now that made a high on this on-balance volume high right there. Up there, exactly. And then it made a higher on-balance volume, but a lower price. So I'm going to be watching this very closely because the QQQ is in this rectangle formation. I'll show it to you on the chart itself. There it is in the weekly chart. Look at that. I drew it in. I said there's a chance that we can arch over. We've got to be careful about that until we can break 630 on the upside. We haven't yet. I'll be back in a moment. Basil Chapman, Dow's down 190. S&P's down 31.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So we're back. I just want to show you something. I forgot all about it. I should have done that before. Is the Bitcoin. So I had a question about, is Ethereum about to move higher and a particular stock? Let me just put this in here. So look at this. Here's the Bitcoin. Bitcoin made a peak F in the weekly chart over there on the right. In the middle, that you can't see, is a peak D. Let me just move this away a little bit. Chapman Wave inside track, it went right to the inside track, and then lo and behold, it repelled from 127,750, comes tumbling down the arch formation. Left side, right side price time match hasn't taken out the 79,630 low that was made back in the summer. But what has happened, we've got very close, and now we're making low lows and lower highs in the weekly chart. Now, lower highs and higher lows, and that makes a little bit of a triangle, but actually it's more like the Chapman Wave inverted falling axe formation or the arch formation. We've come down, but we haven't gone to the 80,750 level, which was the low of around about the 22nd of November. But we've stuck here. We're at this point down $20 at 87,940. So look at Ethereum. So I wanted to show you this rally, the latest rally in the 120-minute chart showed you the cup formation, and on the right, when we made that peak C, which was underneath the previous high by just a tad, what we're looking at is that the MACD did rally nicely. The stochastic ran over 80%, and now it's failing. That's usually a very bad sign in terms of holding the highs, and it didn't. On balance volume, look at that, flat, just very, very poor. Now, what I want you to show you is, let's click, click, click. What I want you to show you is the Ethereum, and there are times when one goes away from the other, but basically they're going in the same trajectory. So the percentages might be different, but they're going in the same trajectory. And in this particular case, Ethereum is unchanged right here, 2767, but it's making lower lows and lower highs. It did make a peak D, and it's arched over but it hasn't failed. It hasn't even taken out the low of the 1st of December of 25.65. So the question, if I can find it, was Tom Lee. I spoke about Tom Lee just recently, which was one of the reasons why I went so negative on the on Bitcoin and Ethereum. He just got so enthusiastic. I've never quite heard him that way about Bitcoin, etc., and that just made me very, very nervous. I just see a question in the Tiger YouTube. He must have been reading my mind because I have a whole thing on that. I'll be back there in a moment. So can you look, Basil, can you look at Ethereum, specifically BMNR, and a lot of people ask me this question, and I've just been saying it's acting very poorly. BMNR is a Tom Lee vehicle. He recently started promoting recently, but it's been a little while. And has he been pushing it? JP Morgan, and I really respect Tom Lee. I think he's one of the few. When he makes a mistake, it's a big mistake. When he's right on, and he can be right on for quite a while, he is right on. I listen to him, but I always do my own work. And by the time I'm doing my own work, I kind of forgotten what other people have said because my work, I've got a lot of information right there. So JP Morgan is also now offering money market accounts, quote, on-chain, close quote, via Ethereum. Okay, so all I can say is this. I don't like the chart. It just looks, look at that, 200-period moving average in the weekly chart, Ethereum and BMNR, it's the same, just hugging it. It can't get out of its own way. Look at that massive move up into the 160 area, and now it's trading at $28.43. There's something not right with this. So I'm just going to say to you, look, if both Bitcoin and Ethereum and BMNR are Bitmine immersion technologies, if they're going to move higher, they've got the rectangle formation to get out of. So in this case, you're at 28.43. You've got to get all the way to the 65.70 area to get out of the way. So there's plenty of time. So what I'm going to recommend is this. I will have nothing to do. We do have Bitcoin, IBIT, from much lower down. And I'm just watching it. I mean, you're long from 39, and it went all the way to 70 something. We've taken a little bit off, but I don't want to do anything. I'd like to keep the position to be able to add to it, but at this particular point, it's just looking lousy. So let me do this. Let's look at it together. Let's go back to, so you asked me about ETH. So ETH. And if Ethereum, which is trading at 27.69, I know you're giving up 2 points, so less than 2 points. But if Ethereum cannot get there, it has to close above the 29.01 high of the 22nd of December. I'm prepared to look at, I'd rather be buying strength and trying to assess whether this is going to be a pop and drop or a pop and continue than to buy weakness and say I'm catching a falling knife, because there really isn't a base of support. Yes, there's a trend line, and I can draw the trend line in like this, but it's only a trend line. It's not like it's the gospel, right? No, it's just a trend line. And you can take it out and still be a negative, or you can hold and still be negative. It has to do something very different. So let's just do that. So Ethereum needs to trade above close above 2901, sorry. I keep thinking BMNR, right? BMNR has to close, this is a little worse, 28.42. That's a little bit more. It has to close above 32.78. Give me a yell. If you see it closing, even getting into the 3180 area, let's look at it, because if the MACD is flipping back to positive and the stochastic's gone from 7% into the 12% area, I can start to look at it. But otherwise, okay? So I'm just saying I'm still skeptical. Not only that, look at this monthly spike. I would say that it's going to take 1, 2, 3, 4, 5. Since we closed below the low of that month, which is July, with a high of 160. I knew it was coming up, but I forgot to actually type it in. 161.0 round number, all-time high, major high, right? All-time or major high? All-time high is up in the 880s or something like that. Unbelievable. These 680.00. Oh, they're all 00s. 680. All right, this doesn't like to trade. Yes, it does trade in pennies. Okay, 28.48 right now. Yeah, look, when it gives it up, it really punishes people. I mean, that's real punishment, right? And now in this last one, if people didn't get out in the 150s, when they were once in 700 and 800, it's going to do it again. I'm just thinking that markets do that. They tend to say, look, we're giving you opportunities. If you don't take it, it's going to be very hard. And I think this is going to be very hard. So the 200-period moving average in the BMR daily is at 34.47. I did want to take a little time on this because there are many people that I get emails from saying, yep, there's one right now, coin. 3 coins in a fountain. Okay, coin is Coinbase Global Inc. Look, there's a dreaded H. It's even low. It's almost 10, and it went to a peak D as well. In the 200-period moving average of 223, and right now it's at 235. It's like a magnet. I'd just be real careful. I'll be back in a moment. Dow's down 180. S&P's now come back a little bit, minus 22.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So let me just add this to the picture here of the Bitcoin. I might be wrong about this because it's kind of a complex thing. Excuse me. But I think Robinhood should be in the equation. Trading down 96 right now to 117.15. So I'm watching this real close. We took a little bit of profits off this in the last iteration of our included the add-on at 109. And it went all the way to the almost 140. So it was really appropriate to be taking something off. But most importantly, this is saying to me that the sell mode in the daily chart of Robinhood, and although it hasn't gone pink, the price under the 14-period moving average at least 3 to 4 times in the weekly suggests that it's in a sell signal. That's why it's got a down arrow at that peak D. With a second dreaded H unfolding, I'm watching this closely because by next week, not this week, but next week, which will be the week of, I didn't change the calendar. I printed 2006 by mistake instead of 2026. But let's just say the first full week, which will be next week, by the end of that week, if Robinhood is below 110 and Bitcoin still hasn't rallied, it's just telling you, keep an eye on it because when Robinhood, and I suspect it will do that, finally gets back into the 124 to 128 area, you're going to find that maybe Bitcoin has had a decent rebound, but most importantly, the traders who are in the Robinhood sphere are going to be seeing a kind of a catch-up after it being one of the most popular stocks back into about October of 2025. And since then, it just hasn't performed. I think it will be back, but I've got to respect this peak D H pattern that's gone to a second H. And I think it kind of goes together with the Bitcoin. It could be wrong, I'm just saying. Next thing was Newmont Mining. So Newmont Mining went to a peak EF, went to an F right there with a doji candle. It's down after making a fantastic move to the upside. It's at 98.28, down 750. It made a high on Friday of 106.34. I would say 106.34 to 90. Today's low is 97. I'd say that's a pretty deep pullback, right? There's an island reversal. I like to do that just to show you. And I have no choice but to keep it as a yellow oval. I usually use that for instant restarts, but I'll use that as a top. And it's gone to a leg E with an alternate count, but it's an E at this point in the weekly chart, uppercase E, and a leg D in the monthly chart. So Newmont Mining, and I didn't give you downside areas. So Newmont Mining, a high that was made back here, this peak F back in 2022, that was April, of 86.37. If Newmont Mining closes, this is a monthly chart, but on a daily basis, if it closes under that level, then there's just a wick. The body of the previous candle has a high of 81.14, and we're talking about 86.37. So that's the range that I'm looking at, 86 to 81. If Newmont Mining breaks under that in this move down after a leg D in the monthly chart, I'd say be real careful. At this point, it just looks overextended and it's pulling back. And the weekly chart says the whole area between 94 and 90 should be very strong support. That's what I'm looking at right now. Next question came in. So I did some work over the weekend, and I started on Wednesday, Thursday, and I looked at Lionsgate Studios Corporation Movies. it had a move way back. I think this recalculated, right? It used to be Lionsgate. It had a different symbol, and then something happened. I don't know what it was. Back in May of 2024, and it came public again with a high of 10.70 and a low of 785. Well, it went down to 555 back in July. And look what happened. I drew this in because I thought this is one that I'm sure my subscribers would like, because it is just out of the realm of everything else. It's just independent. It's in movies, and it has had a good, it really has a good history. And why am I opening? Oh, there, that's what I wanted to do. So if you look at this, there was a cup formation, and then a lower cup formation. Now, I look at these, and very often they miss in time, but they give you the same feeling of a rally, failure, a rally, failure, and a rally. So this is only a leg C in the weekly chart, and I think it should go higher. I like it very much. 914 was the high back in 2025. I think it was maybe March or so. Pulls back into the July low. And I like to look at the technicals. It went to the Chapman wave inside wedge target repellent line. It went above it. It went to the Chapman wave left side, right side price symmetry, bar symmetry. It made it in 1 week early, getting to 914. It got it to it last week. It's done everything. Stochastic's fantastic. This is a weekly chart at 89%. On balance volume's a little bit overbought. MACD is still expanding. The relative strength is very strong. I've loved this stock. I looked at it last week when it was down here. I don't know why I was so late in getting to the party. When it made that peak D, and as it was moving higher, that was on the 23rd, I said, oh, keep that in mind. Do I buy a leg E? Well, it went from the 832 level straight up, and it made another recovery high today at 941. I like this very much. I've got it as a leg F. I can, if today, when the Dow's down 200 and the S&P's down 20 points, this is actually unchanged. This is a good sign. So yes, I like it. And as I say, it's one that I actually wanted. I've been following it for a while, a long time actually. But just most recently, as it was breaking the 9-period moving average, when it pulled back and it held it and it continued higher, that was back in the $7 area. Just a big mistake. This is 2.5 points almost above that. Fantastic. I like this. All I can say is that if it gets to the $8.77 to $8.51 in the next week or so, that will give you another opportunity to at least do an analysis to say, okay, do you get in now? If you are in it, and I think that Fletch, you are in it already? Yeah, congratulations. Yeah, you've had a really big gain on that. In the sixes, I want to add more. I would say I might change my mind, because Friday's low was 887, and the way it's acting here, it doesn't even want to go there, but preferably just around under 9. Let's look at it together. Give me a yell, we'll look at it together, because that's where I would add on. And it's only a leg C in the weekly chart. Could pull back, but this is it. I'll be back in a moment. Dow's down 210.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back. Dow's down 198, S&P down 21, and then I mentioned in the den was platinum. Got whacked. It's full in the den. Yeah, down 14.5% at now minus 368 at 2122.70. So have a look at this. I had an alternate count in the daily chart, peak A, B, C, D, and then it pulled back sharply. And then it went to E/A. Under it has a little gray A, but then it goes to this F/C, and obviously this really looks like it's going to turn into an F. But it's a D in the weekly chart, so that says, okay, the pullback could be quite serious. Only a C in the monthly chart. So that says it should still go to higher highs. Well, we'll see what happens. Cut in half on this candle from December, from the high that was made to the low. It's right here. It's right there in the middle. The week is young. It's just barely started. We're going to see what happens. All right. So the question came in. So I just want to show the chart. Question came in about the VIX index. The VIX index right now, it is up. It's up 93 cents at 14.53. So this is fascinating to me. When the VIX index has these big moves straight off almost a high, I always say, oh, be careful, because that just says it's a very short-lived pullback. When the VIX gets slow to start, and here we are at a high, almost an all-time high by just 80 points or something like that in the Dow on Friday. S&P did make a new high, all-time high. And here the VIX is off the low of, let's say, 13.36. It was made on the 24th. But let me show you something else. And I love this chart. I always put this chart up. This is the CBOE Volatility Index. This is the fear gauge, we call it. And I drew this gray line in ages ago. It has all these different China and domestic back in 2000, August of 2015, goes to 53. China with interest rates, U.S. rates, then Trump and Comey. Anybody remember that? Trump and Comey back in 2016. Then North Korea, and then the higher yields. All of a sudden, February of 2018, yields, tariffs, China, Saudis, 50.30. And look at this. And then this major one, the coronavirus, business, Fed, everything, 85.47, March low of 2020. We still have some positions that are long from that day of the low or that week. And now look what happens. You get these long wicks and there's nothing. Long wick, Japan. Everybody forget about that, right? 65.75 on August. That was July 2024. Then the VIX comes tumbling down in the same bar. This is a monthly chart to 10.62. Tariffs, 28.99. Where was that? That was April of 2025. We still have some long positions from there. Okay, so here's this purplish line that I drew in. We've been here so many times. Now, I could take it and lower it to say, well, that's really when it takes off. Well, I will do that. I'll lower it, and I'll lower it to the point where it is at 10 point. No, that's not 1177. Yes, 1177. Let's say it's in the 11s, right? Even though it went to 10.62 in July of 2024. So all I'm saying is that there might be, if I'm correct in my analysis, and so far, over the last week, I haven't really had anything to contradict that the best of the best are still the best of the best in this last phase. That includes the General Motors, Alcoa, we're along those, General Electric, we're along. And I'm just saying, I think we've had a rollover, a sector rotation. And that sector rotation is going to be pretty... should I say merciless? Yeah, I think it's going to be merciless because and that includes, it had included the Bitcoin, but I think Bitcoin is still there right now. But I remember hearing the voice of a number of people. It was in the actual voice, the quality of the voice, the excitedness over the last 2 weeks in the gold interviews, people talking about gold in the interviews, CNBC or wherever, Bloomberg. And there was just a palpable sense of, woohoo, I'm very nervous, woohoo. And when you get this contradiction where people are just, they are nervously thrilled, that's never good. And that's exactly what we're seeing. So I'm saying that there's a chance that we're getting another rotation this first week and a half, 2 weeks of January, including this week, is going to be so telling that I think there's a market change. We've raised some cash. We're prepared for some kind of a rotation. Look at the XLF. I wasn't asked about it, but I got it right here. The XLF peak D 3 sessions ago in the 55s, pulls back, goes where? It goes right into the Chapman wave inside track repellent zone that has just been formidable as resistance for so long. And it's snuck in there. Now it's just a little bit under it. Fabulous action in the banks, but I think there as well, just a little bit overbought, and we're going to be watching this. So so a question came up about RKLB. What was the question? Oh, good, I'll look at it. Yeah. So RKLB, Rocket Lab, USA, Aerospace Manufacturer, End-to-End Solutions. We have along from the 48 area. It hit 79 just 3 sessions ago, I should say. It's trading up 75 cents at 71.40. So this double topish area that I'm looking at in the weekly chart and a leg D in the monthly chart, I'm looking at this and I'm saying, okay, you are going to be a clue, because if speculation comes back anytime in January, and I suspect maybe it's after a little bit of a pullback, a digestive phase going into the beginning of January, starting right now. If Rocket Labs breaks under 64, it's going to say, you're going to have to wait a little bit for speculation to come back, especially in this area. But if it's able to bounce and sustain and hold above 60, what's the low today? 69.40. If it can hold above 67.50, 68 to 67.50, all of this week, and have an attempt, I don't know if it's going to be able to get into this ugly bar of Friday, get back into the 72s. It's a 71.47, so 72.80 is really the level I'd be looking at, which is 72.80 and 73.10. Just tag it once to say, hey, market might be weakening, but I'm still finding some support. It's going to tell me that the speculative area is it should come back, and fairly soon, within another couple of weeks. But other areas that have been really on fire, and other areas that were on fire and are really struggling to come back, are not going to succeed. It's going to be a rotation into other areas that we were identifying about 2-3 months ago, and I've been mentioning in my webinars and my videos that I do for subscribers. I think that we're looking at a sea change, and that sea change is going to be very important going into February. How it unfolds, I don't know yet, but that's going to be the way I'm looking at 2026. Question came up. AGQ as we go into the final break here. AGQ. Pro shares, ultra short. Oh, silver. Oh, that's the long side. Down 40, down 20%. Wow, these moves are quick. Yeah, I'll be back. Dow's now down 237. S&P's down 30. Be careful here.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Just real quick, the FXI, that's the ETF, the iShares China Large Cap ETF, down 66 cents at 38.27. Yeah, I talked about this. I said this is the dreaded H pattern, and it went under the 38.15 low, and I think we're going to arch over and come back and break it. So that I think this is looking very weak right now. So the question, I didn't read the question properly. I'm sorry. Yeah, Rocket Lab. I have it in B or C. What do you have it? Well, I don't. And the reason is, and I forgot to mention this, I should have mentioned it in my video on Friday for subscribers. First of all, it's got the Chapman wave squash, which says you should go very quickly to an A, a B, a C, and then take a little time and then go to a D. It's done that. However, that just before we went along at 48.70, there was a high of 49.68 on the 4th of December, and the very next day had a high of 49.70. But if you look at the on-balance volume, you see the little hiccup there? You see the little hiccup in the relative strength? So I call that a phantom B. Why? Because I like to get to, legitimately in the Chapman wave methodology, without breaking any rules, I like to get to a D, to be ready to if it's a C, but everything about it looks like a D. I need to look carefully to see, could it possibly be a D? Because I want to be taking something off. I want to be ready for a pullback. That's kind of what I did. But at the same time, very often the phantom peak, and I always change the color to show that's a phantom peak. It's not real, but I've made it real. Can go to the D, and I suspect it will go to the D in the 80 area. But right now, I'm treating it as something to respect as a top because of the weekly chart as well. Hope that helped you. So AQST, okay. So I don't think I'll have time for that. Yep, we're just about to break, and you're going to go to Steve Rhodes, AQST, as we do the AQST. So check out Opening Call Daily Newsletter. We are preparing for this next phase coming in January. Very nice action, AQST. Yes, there are so many of these therapeutic companies doing well. I think that 642 is really what you need to see soon. Have a great day. Check out